Hello guys, this is fairbinaryoptions.com and we're looking at the Euro US dollar, the 4-hour chart, not on the 1-hour chart. The reason for that is that we have a nice possible contracting triangle, and this contracting triangle is about to break lower. Now you might say, why to break lower and not to break higher? Because what we are seeing here, we are seeing a let's say trend line from here to here, or a possible leg of a contracting triangle, and this should be the end of the wave to the upside. Now this wave to the upside, this one, see here goes A, B, C, D, E, as you can see, and what I would like to do here on this 4-hour chart is, of course, to buy some put options. Now this is the first impression, or this is the first thing to consider when looking at such a pattern. The problem is that if this is a contracting triangle like we are suggesting here for so long ago, and this to be the B wave, let's say, to the upside, this to be the C wave to the downside, and this to be the D wave to the upside here, or so A, B, C, D, so this to be the D wave. It cannot be, because no parts of the previous C wave should break the B to D trend line. So if you consider that the B to D trend line should be the one here, well, this is just not the case. Well, if this is not the case, how about this to be the end of the D wave? So the trend line to actually look like this, and then for price to go from here to go A, B, and then a C wave to the downside. Well, this is not valid, or this is not possible as well, because in a contracting triangle, the E wave to come, it's still mandatory not to break the B to D trend line. So what to do, or what would be the situation to look for? It means that the triangle that you are seeing here, this contracting triangle, actually does not exist, or if it exists as a triangle of a lower degree, and the actual end for the D wave to the upside is still this one here. Then it means that of a lower degree you might have the following situation: this to be a wave A, of a lower degree, of course, and here this to be the wave A, and then you are looking for a B wave to come in the form of a contracting triangle, A, B, C, D, E, and there you go. This would be the B wave for the whole move. Now if this is the B wave, then definitely I would be interested to see the C wave to come, as we are looking at a possible zigzag, and the zigzag to come with the following structure: 5 waves impulsive move here based on the retracement on the B wave. Now as you can see, we have a problem here. The problem here is the fact that this move from the upside, it is not a 5-way structure in order for the whole to be a zigzag. It means that there is a 3-way structure that goes like this: A, B, and then the C wave, A, B, C, and this contracting triangle here normally would be an X wave, like this, and like this. Like any contracting triangle, this one travels within the A and C and B and D trend lines, make no mistake, and it implies that price should move to the downside after this. So this to be A, B, C, D, E, and price should move to the downside after this triangle is to be broken. So what I would do here is, for the Euro US dollar, I would look to buy put options by the time the B to D trend line, this one here, the B to D trend line is broken, and these put options to have, of course, end of week expiration date. This is what I'm looking for. And now I'm expecting to the downside still a corrective move, and the corrective move to come in the form of the move prior to the triangular formation. Therefore, we're looking for ABCX, and now we're looking for another ABC to the downside. I would say that this is let's say a win-win situation for the euro US dollar, also both based on the fundamental side, as it is unlikely that price would break this area until the non-farm payrolls are going to come for next week. What to be the target for the move to the downside? Well, the move to the downside has a classical target as the leg of a contracting triangle, and the leg of a contracting triangle goes and should retrace from the lows here to the highs, should retrace around 50%, 61.8. So I would say 36.30, 36.50 is let's say mandatory to come. I would target the 50% level, the 50% retracement level, and this would be 136.27. Thank you very much for being here. Let's write on the screen what we're doing here on fairbinaryoptions.com. We are looking at buying put options with end of week expiration date for the euro and the US dollar pair. Again, this is fairbinaryoptions.com. All these analysis and recommendations are possible due to the help of our sponsor, Lionive. Bye-bye.